You know what's crazy? You deposit your money in a bank, they lend it out, and they make 10 times what you invested using your money. And somehow they can still charge you multiple fees. Let me show you how they play the game. Today, I'm breaking down exactly how banks make billions of dollars every single year through loans, interest, fees, and something that they call fractional reserve lending. And more importantly, this is what you can do about it to start playing the game yourself, just like they do. I'm Cal Connect, real estate broker, Army veteran, and accredited investor. And I've stopped putting my cash in the bank because once you see how the system works, you'll realize that it was never designed to make you wealthy. Let's chat about how banks actually make money. When you deposit $10,000 into a bank, the bank doesn't hold on to it. What they're going to do is they're going to issue loans. Think mortgages, car loans, personal loans, credit cards, any sort of loan. And all of that is going to be at a much, much higher interest rate than what they give to you. Banks also utilize fractional reserve lending, or FRL for short, and oftentimes they have little reserves. And they only have to keep a fraction, sometimes as little as 10% in their vaults. That means that for every $10 that you deposit, they can lend out 9, leaving 1 in their bank right here and having this created as debt at a much higher interest rate than they're giving you. Additionally, they utilize something called interest rate arbitrage. And this is key to the strategy because what this does is they pay you negligible amounts of money. Often what? 0.1% APR annually on your investment in order for you to give them their money to keep it safe. And then they're going to go and charge 7 to 30% in interest on anybody borrowing from them. That's called interest spread. And they can lend this out, and this is how they have their bread and butter profit margins. Because if you look at that, even if they're lending out your money at 7%, they are making 6.9% off of the money that you deposited into the bank. They also charge overdraft fees, maintenance fees, ATM fees, late payment fees. In 2024, US banks alone made over $11 billion just off of overdraft fees. That's insane. Now, let's clear some space up and talk about what else banks do and how else they use this money. Because believe it or not, banks don't just make loans. That is only one of their multiple revenue streams. A lot of banks will utilize your money, your original 10K here, and instead of having it sitting in the bank doing nothing for them, waiting for somebody to take a loan out, they're going to go and reinvest that money themselves into bonds, mortgage-backed securities, and credit. They're not only just there to lend your money. These investments bring in secure long-term returns, all the while having your money easily accessible to them to give back should you need it. Second, they do something called leveraging the Fed. Now, for those of you who do not know, the Fed is part of the federal government's central reserve bank. And banks can borrow money from the Fed at super, super low interest rates. And this is money that they can then loan to you at a premium, which is a never-ending cycle. So for example, if I am the bank right here, and I want to borrow money from the Fed, I can borrow money as low as the Fed will let me. Right now, it's about 3.5%. So if the bank can borrow money from the Fed at 3.5%, they need to make money. This is known as prime. They will have prime plus as their terms. And the plus will be plus 1.5, plus 1, plus whatever that spread is, think of earlier. And they are going to give you the loan at 6%, which is prime plus whatever it is that they decide to do. So if they give you a 6% loan, that's going to be prime plus 2.5%. Other places, they'll have a bigger spread, smaller spread. It just depends on what the loan is being utilized for. But banks are borrowing money that they do not have, just like they're borrowing it from you, depositing it from the Federal Reserve, and they are going to give you, or whoever the consumer is that wants to borrow money, the money that they're borrowing, and they're going to make an override. So because of this, your $10,000 deposit, because they only have to keep 10% in the bank, can be multiplied to over $90,000 in revenues for the bank, because they are the ones making all of that money through loans and investments, and they're paying themselves. And you're getting next to nothing with your 0.1%. Now, why do banks always seem to win? Well, banks make more money when you save. They make money when you borrow. They make money when you're broke. So even in recessions, banks win, plain and simple, because they have cash flow, they have leverage, and whenever a bailout's needed, guess what? It goes to the banks. Meanwhile, most people are taught that the smartest thing you can do is to stash your money into the bank and avoid debt, which, believe it or not, is the exact opposite of how the banks are operating. So yes, they're lying to you. So what you can do instead is, first and foremost, you should consider becoming your own bank. Now, when I say that, I don't mean that you need to go open your own $50 million bank that is doing this exact cycle, getting the securities licenses needed. What I mean is that you need to utilize your own funds in order to acquire cash flowing assets. Think of your rental properties, your stocks, your dividends, things of that nature. And even a small business, potentially, if you have something that you want to try and you have a particular skill set. And instead of receiving that 0.01% or 0.1%, depending on what type of account you have, and if you put it in a CD, ooh, wow, you might get 1 to 3%, woohoo, you're going to be aiming for 10 to 20% returns that's backed by a hard asset. Also, you can use your debt strategically. Leverage the debt the same way that the banks do by investing in other appreciating assets, like income-producing properties, other stocks that somebody else holds, other businesses that you are just a silent partner in. There's a lot of options here. And you can stop holding cash long-term because of inflation. Cash loses its value every single year. So don't just let your money slip away and sit idle on the sidelines while the banks are making a profit. You need to learn how to capitalize and utilize your capital, aka your money, just like an investor. They use your money to build wealth. It's time for you to make yours do the same.